Hey guys, my name is Destiny Ray. I am the fairy godmother of finance, and it is my job to bridge the gap between the haves and the have-nots. Now, I want to thank you guys for joining and watching my video today. If you guys haven't watched the previous video that this is part two of the series, you might want to go back and watch that video first so that you can kind of get it in a sequential order and you don't feel that anything's missing. The first part of the video series, we were talking about what to expect when you're creating a business, what sorts of things that you're actually going to do, like when we're walking through actually creating and putting the paperwork together to start your new business. If you are familiar and you stick around, you're going to be able to see that our take here on this channel is a lot different than the other coaches and gurus or even other service providers who are on YouTube or that you may have met, because not only do we don't just teach you, we don't just coach you, we actually do the service and the work of what we're helping you with, so you guys are actually able to learn what needs to be done and why, but then also get it done for you to kind of help you, with transparency. And we teach you and make that available. Say, hey, this is what you need to have and why. We educate you in how this is going to benefit you, the pros and cons, and then we actually make sure that you get it done and help you with the execution phase, so that's one less task or three that you actually have to just really worry about doing it yourself. In part two of the series, you are going to really just talk about the different types of business entity types that you can actually use in order to start your small business. Typically, people only, know or even talk about the most common, the most popular entity structures, which are LLCs, DBAs, and corporations. And for honorable mention, there's a nonprofit on there, but that's the least of the of the three that would come in after a corporation. And then there are different types of nonprofits, corporations. We're not going to go dive into the many subtypes. Of course, there'll be more information on the workshop that we have coming up. If you guys aren't familiar with the workshop is from Startup to Profit. It's a 2-day workshop that will basically, day one, go more into depth about the different entity types, the pros and cons, the benefits of each, and why you should pick one and what you need to expect, and just really weigh out when you're operating in those entity structures. And then day two, we're actually working on your funding, because we're actually going to put together your funding and start on that, where we actually give you the business funding that you're looking for. We actually broker your loans for you, and help you get business credit cards, whether you have good personal credit or not. We have other ways around that. So it's like we want you to succeed so much that we've actually gone through and put together trainings telling you what we need you to have and what you need to not have on your applications. So, nowhere else you're going to get this level, this white glove level. Should be charging way more for it than I do, but nowhere else you're going to get this white glove level of concierge service, as far as business funding, okay, than here. So, with that being said, let's go ahead and get started. You already know again about the different LLCs and the DBAs and the corporations, but I can't tell overall, but did you guys even know that there were other types of entity structures that you can operate from? If you did or you didn't, or if you didn't know how they operated, the nuances or the pros and cons, the benefits, for example, of each one, wherever you fall in that spectrum, let's go ahead and get started and discuss the differences between the two and how they can really help you and your business out. Okay, guys. So now that we've gotten past all of uh, the introductory speech, the background and knowledge, and so, and you've already watched the first part in the series, right? Yeah, you went back. No, you didn't go back. I already feel it in my heart. I know you didn't go back, but that's okay. And I want you guys to excuse my voice. I'm getting a little groggy because guess what? I recorded this entire video. Okay, I recorded this entire video and then my internet connection just crashed and it didn't save anything and I have to do it all over again. But I'm hyped. It's like I'm just ready to get it done. It's super late. I did not go to sleep. I find that my best work, I'm able to get a lot more done if I'm overnight with it. So let's just go ahead and, just really just knock this out of the park. Let's go ahead and get started with, as you can see here, the most common or the most popular types of business structures. And the first, which is actually the easiest to actually get because that's the easiest or the lowest barrier of entry would be the DBA, which is short for doing business as. It's also known as a sole proprietorship. Now, why does it have two different names? Why are they written that way? Well, depending on what area or region you are, because each state and county, etc., they're basically each state is run like their own country. That's why you have certain things you can do over there that you can't do over here and vice versa, the same as if you were in a whole different continent country. And so they all are united and they work together to form the United States. It is not just all one big great continuous or contiguous country as most people have been primed to think. But that's a history and political lesson for another day. Huh? So the main difference between the two, a sole proprietorship and a DBA, besides the region, is more or less the technicality as far as where the liability lies. And but essentially they serve the same function. They both really allow you to operate under your own name and your own tax ID. A tax ID, just for you guys who are sticklers, a tax ID essentially is either a social security number or an EIN. And because they're both operating and as a way to identify who's responsible for what tax or who's owed any type of return or refund. And so they just separated by the type of entity that it's attached to. Now, the next thing on the list is a non-profit corporation. And so there are different types of nonprofit corporations. Actually, I'm going to go double back on number one. The liability is on you, and the sole proprietorship and DBA taxation. If you were to file a return, obviously it's going to be on you. You're going to be treated as one and the same as essentially surety and guaranteeing and first hand or diligently responsible for the not only the debts but the civil infractions and the civil judgments that may or may not be served against you and your operation or your business. For those of you who didn't actually go and file a business entity type and you are in operation, when you go to file your return, if you haven't been operating as an LLC or some other type of more legally structured entity type, you will be considered a sole prop and it will be basically filed with using your social security number or your tax ID number if you are a type of resident or non-resident alien, etc. Now, the nonprofit corporation, back to that. You guys, there are different types of nonprofit organizations. There are not just the 501c3s, which are public entities. Sole proprietorship for you guys is another one that has different variations where you are actually able to operate in the private. You heard of the private sector and then the public sector, and that goes based off of nationality and private banking, trust and estate law, things like that, which is a highly advanced, and estate planning, which is a highly advanced topic. That's not something that we're going into on here today, but I do want to pique your appetite, to let you know that that sort of thing exists. Yeah. So you have also 501, you have C8s, which is private. You don't have some of the same obligations, for example, as a 501c3, whereas a 501c3 has to report down to the penny how their funds are being extrapolated from the business and all the sources that are being driven to the business. Everything has to be accounted for. With the 501c8, not so much. It's more or less and can be operated similarly as a trust, which everything is essentially held in trust in the US. And that's again more or less an advanced topic, that would cause for a one-on-one consultation where you guys are able to, if you're ready, to really learn about how to operate, um, like the wealth you do. They don't just um, operate as a debtor and basic, um, rudimentary operations and dealings, how we're primarily taught in school. Um, The next thing on the list is an LLC. It stands for Limited Liability Corporation. Here on number 3. Now, a lot of people don't know this, especially like a lot of coaches, uh, gurus, or consultants. Sometimes not even these little companies that you'll see that will actually go and file the company for you, but even sometimes even lawyers, because not all lawyers know every area of the law. A lot of them are very general, and they're just filling out forms, based on whatever you tell them to put. If you were to go to, say, for example, you can't even go to like the court or the Secretary of State, for example, and directly go and ask them all of these, consulting questions, because they're going to be able to say, hey, we cannot give you legal advice. The only thing they suggest you do is contact a lawyer, etc. And then basically you're you're on your own. A lot of times they don't even know the difference. They just know how to fill out the form and stamp and go to the next thing. So truly, as you, the professional the business owner, the onus is really on you to know your best options, to know how to fill out the forms or what you're asking for, so that you can call it by name, because you're the professional. The limited liability, it's called, first of all, limited in liability because it is a hybrid entity structure. It's a hybrid between the DBA and a corporation. It has a bit of nuances and characteristics of both. It has a pass through taxation. Um, like the DBA or the sole proper does, or the assumed name certificate is another way, assumed name, that another way, or that it's also called. I forgot to put that on here. I just actually thought about that just now. It's probably why I was led to re-record this video. I'm just going to try to look for the brighter side in that one. But the LLC, you limited liability corporation, the LLC is a hybrid between the sole prop and the corporation. Now you already see the benefits of the pass through taxation, because you're able to write off and to have some liability shift more fluently between the two, between your operation and you personally, as far as the tax liability. And but you also have the protection of separation of yourself and the business's asset, like the corporation do. And you even have some access, a taste of the benefits that come along. You don't get quite the more intricate fringe benefits as, say, for example, a C corporation would get, but you're getting more or less along the lines of what an S corporation would get. And on the next page, I'm going to really get to the nuance between the two. The next thing on the list would be an S corporation. An S corporation is um, basically, it is the difference between, because we already talked about what a corporation is, the difference between an S corp and a C corp, quite honestly, is with one, you're getting even more of benefits to it. The operation and managing the costs and returns and the liability, it costs a bit more to operate than an LLC and a DBA, and that C corp even more so. But you're able to write off more. You're audited a bit less. I'm gonna say a lot less, actually, than an LLC, because less people operate those, and the people who do operate those are usually the 7, 8, and 9, figure businesses, and they usually have their stuff airtight to where there's less room or margin for error with those types of structures. So those are the most common types, popular types of business structures. I feel like I had a bit more to say and kind of clarified it on the first go around in the video, but it's late. I think that I did include a couple of things here now that I didn't, such as the assumed name certificate. So it's probably an even or a fair trade. For more in-depth knowledge on how to apply these certain benefits and what they are, the pros and cons of them, that's something you're going to have to attend the workshop for, to be able to get more of an in-depth application. So let's move along to the next one. Okay, so now that we've talked about the most common entity types, let's talk about the least common. As you can see, I did change clothes because this is another day. I think I mentioned earlier in the video that my internet had crashed while I was putting together this video, this training, so I had to re-record. And I'm gonna tell you. I am determined. Okay, the devil has been busy, but I'm determined to get through this video series. So let's start with C corporations. So on the most common, we had the S corporation, and the only real or legitimate difference between the S and C corporation is they're both going to have ink. Like if you were to write the official legal name, they're both going to be written as INC or incorporated. The main or the most notable differences is how the S Corp is fairly more common because it's slightly easier to manage than the C Corp. The C Corp does give you more fringe benefits. Say, for example, a fringe benefit means like you can get self-employed insurance, like if you were to get an LLC. You can also get self-employed insurance if you were to get a corporation. But the difference being that because you are completely separated from your business, it's essentially as if you work for a company instead of for yourself. That's really a delineation between the two. You're able to completely deduct the cost of insurance and get a credit versus it passing through and you getting like a portion of credits for certain things. So it also is a bit more complex to manage its articles of incorporation. Like the minutes, mainly because you have so many different things that you have to keep a watch on, as far as even tax filings. You, like for corporations, for example, you'll be filing 1120s, and not every preparer can do those or should. You would need to have someone who's really experienced or trained on doing those types, because you have to have a software down to your computer, and because it's more secure, those entity types typically get audited a bit less than LLCs to have a corporation. So I actually would advise having those more than an LLC, but to each his own. It's your choice on how you would like to run your organization. For more details, information, stuff like that, you guys are definitely gonna need to come to the workshop. There's only so much information that I could or even would to protect the integrity of the program, of course, even give in the videos. So now with that being said, let's move to a professional limited liability corporation. You might see written as like PLLC, and the reason being is because a professional is like anyone who is licensed. Like I have a few licenses myself. So if I chose to operate fully or solely in those industries in which I have licenses, then I could opt for a PLLC. And a professional is someone who's licensed, such as like a doctor. Okay, so a medical doctor, a doctor of dentistry, like oncologists, electricians, any other type of contractor that requires some type of licensure. I wouldn't say lawyers because technically lawyers don't have licenses because you don't need a law to, license to practice law. And well, that's a tongue twister. But you don't need a license to practice law. So you get like a bar card, which is essentially a membership card to the British Accreditation Registry, and that's what bar card is. It's based out in London, which actually makes esquires or attorneys foreign agents. But that's a whole nother conversation. So basically. A professional corporation is a corporation where the industry or the owner or the key executives are licensed in some shape, form, or fashion. The next thing on the list is a partnership. Now, you have different types of partnerships. Some of them partnerships can be between two DBAs, can be between a DBA and a corporation. It can be between the DBA and a um, LLC, which is a hybrid between the two. And then your corporation could be between two professionals or two individuals. It just depends. Like two individuals would more likely be like a type of trust or estate, or like a DBA, like you as a DBA. You even have some like, and just a hint or a tip or a trivia, additional piece of information is that, for example, when you are filing taxes, there is an obscure code in the IRC, which is the Internal Revenue Code, that speaks on a Part A type, specific type of partnership that is considered a disregarded entity. A disregarded entity is just someone who is essentially tax exempt. That's tax exemption, more or less in their language. But this video isn't about tax or exemptions or any of those things. So it's just, throwing it out there. So the last thing on the list is a professional corporation. So a professional corporation, with the limited liability, you guys already were familiar or heard me say, we've already talked about how an LLC or a limited liability means that part of the liability is on the state that you originated in, or that you are qualified like a foreign extension in order to do business. And that foreign extension just basically means if you operate in more than one state, each state is essentially considered their own country. So they have their own rules and forms of governorship there. So you being able to operate in one, they're considered foreign to each other. Well, with here, you have a corporation that's not a hybrid, and they are still individuals who are licensed. And that's really essentially the 8 business types that you can choose. Okay, so now that you've watched the entire episode, you've come to the end. I want to thank you for keeping up and staying to the end of the video. and you need help with other legal businesses that you may have, legal business or matters, I want you to watch my next video to learn more. We're going to be talking about additional services, any add-on services to your small business, and um, if you need a bit more information outside of that, can't go too far in depth when I detect the integrity of the program, but we do give you, more information on things or where you need to be on the mind frame of, instead of just generic or run-of-the-mill information that you find. You may not find this type of information or perspective rather on YouTube. So, with that being said, make sure that you are signed up. I think that it's a lot easier for you guys to text to get in contact with me, because I know me, I'm still always updating my database and always taking trainings, and I'm always studying things on my own to be able to bring to you guys to provide a better service and also tell you about it. And for that, it's like my attention span itself gets a little bit short on attending all of these webinars and in signing up for them. And if I can't get the information quickly, more than likely I will not follow up or attend, because like I'll be distracted by life. So if I'm like that, I'm pretty sure that you guys are starting to get like that at this point too. And I just personally think that it's a lot more convenient and quicker if you were to text. So you guys, you have my number here. If you look down below, the office number 346-317-6784. You guys can text just like you're texting your best friend. If you are your business bestie, we'll be able to answer your questions. Usually we'll be able to get everything that you need through the text, and sometimes if texting back and forth becomes a bit too much, then we'll just pick up the phone or set an appointment to be able to dedicate more time specifically to you. You want to make sure that you do sign up now for the workshop, because we cover all of these things and more. Then we actually get your filings done for you before you leave the workshop. It's actually included in the price of your ticket, so you're not having to pay for a ticket price and then coming to pay additional money for any straight registration. With the filing included, it actually saves you as much as $310 if you're in the state of Texas, like me, because we charge $310. State filing fee charges $310. And now we don't have anything to do with how long they've been taking a file, because especially since COVID, they've been a bit backed up. But on our end, we get the documents in same day they're going out and they're being sent over. And then if you are registering for like payroll to have W-2 employees and other stuff like that, you might get like some follow-up documents to sign, and we will take over those, take those back, review them, and then we'll send them off if they need to, or to you, back to you to make any corrections after we tell you what they are. So yeah. With that being said, I want to um, really thank you guys for watching. Again, like, share, and subscribe. Don't forget to hit that bell. I have another video coming up soon about additional services for businesses who already exist and they need to update or customize some things, and they're ready to go to the next level. Stay tuned and see what I have for you guys then. Bye.